Hey y'all, thanks for watching. My name is Brandon Hoffman. I'm a real estate broker in the Midlands of South Carolina. Honestly, I tried to do this video a different way. I shot it like 50 times and I hated every single take, so this is my redo. And I found a better way to use it. I'm actually using our contract, and I'm going to go through and talk about how to win multiple offers and the negotiable terms that make your offer stand out over other offers. Hey, so thanks for watching. Go ahead and hit that like and subscribe for me, and let's get into the contract itself and talk about how to put yourself in position to win multiple offers. So if you're watching this video, I can only assume that you are trying to buy a house right now because there's no other reason for you to be here. So what I'm going to do is go through our local contract and tell you how to make your offer look strong, because multiple offers are very common right now. Understand your contract of sale may have different terms if you're not in my area, but in general it should have some of the same or similar contingencies and clauses, but you need to consult with your agent and your local attorneys if you have questions about that, which I guess leads me to my disclaimer. This is not legal advice. This is not advice on your particular offer. This is going to be generic advice based on our local contract of sale and some of the terms, clauses, and contingencies in it. So I'm just going to go through, and I actually have our contract in front of me and I've highlighted areas. So this is what I'm going to be working off of. So basically, we've got Bob the buyer has offered to Susie to buy Susie seller's home. And the very first thing that really becomes negotiable in this contract is the price. Now, of course, every seller is always concerned about the price. Every time I ever tell a seller we have an offer, the first question they always ask me is, how much did they offer? So you have to decide how much you really want the home and what it's worth to you. In a multiple offer situation, what you need to do is offer what the home is worth to you. And if someone's willing to pay more, you're not going to be upset, because you know you were comfortable with your offer. And if someone is willing to pay more, they can have it and you can sleep at night. So I never ever suggest what you should offer on the home. I say in a multiple offer scenario, you need to offer what it's worth to you. And that doesn't necessarily mean a certain percentage over asking price or anything like that. It is literally, what is that home worth to you? That's what you should offer. The second part of this is going to be the earnest money. If you're taking out a loan, the earnest money is going to count towards your down payment anyway. So I commonly like to see 1%, but that could vary from area to area. What we see in our market may be a little different in other locations. So anything over 1% just makes that offer look stronger, and knowing it goes towards the down payment, it doesn't really, if you default on the contract, you would lose your earnest money, because that is liquid damages that would be awarded to the seller if you default on the contract as a buyer. But if you go through with your end and you purchase the home, and there are contingencies in place to protect your earnest money, such as inspections, ability to get financing, and all that. So, unless you do something wrong and default on the contract, that's usually relatively safe to offer more earnest money if it makes your offer look stronger. The next thing I'm going to look at is going to be your transaction cost, because while sellers care how much you offered, they care even more about how much they get to keep. So you look stronger as a buyer if you pay your own closing costs. If you're asking the seller to pay for closing costs, you need to keep in mind that reduces the net amount to the seller, and that is what they care about. The second disadvantage of asking for closing costs is it makes you look weaker than someone who is paying their own closing costs. So if I've got two offers where they're almost identical, except for one is paying their own closing costs and the other, the buyer is asking for closing costs, my assumption as an agent is that the buyer that's paying for their own closing costs is actually the stronger buyer. That's just perception. Whether it's true or not, I don't know, but I generally like to know that the buyer has money, because that means they're more likely to get a loan if they're taking one out. Along those same contingencies that actually protect the earnest money is, here in our contract, your ability to get financing. If you can't get financing, you will get your earnest money back. The financing contingency expires 5 days prior to closing. So if there's a problem, you would need to know before then. And then it's also financing type. So obviously cash is king, and if you have someone who's time motivated, they need to sell by a certain time frame. They actually care more about reduced contingencies than they even do about getting the most money from the sale. So the stronger buyer again is going to be cash, but from there the perception is that a conventional buyer is stronger than a FHA, that is stronger than a VA, that is stronger than a USDA, that is stronger than a state housing loan. So if you're getting a VA or a USDA or state housing loan, you may be at a disadvantage from the jump. However, there are things you can do, like offering an increased amount of earnest money, offering more money that may offset your financing type. And I apologize, I know that VA buyers, FHA buyers, I know that you guys are excellent, strong buyers, and that just happened to be the best product for you. I happen to love the VA loans. I think it's the best product out there if you're eligible for it. But when you're in a multiple offer situation and you're competing against cash or conventional, it does hurt you a little bit. The other thing I want to talk about here is whether you have a pre-qualification, a pre-approval, or an approval. So a full approval is going to be best. That means you've already been through underwriting, your financial documents have been approved by the underwriter, and at that point you just need to add a house. You need to have the appraisal done, and you can close on it. A pre-approval is better than a pre-qualification, because a pre-approval means you've turned in some documents. A pre-qualification basically means that the lender has taken a verbal statement over the phone about your income, and they've checked your credit typically. So the pre-qualification is better than nothing, but it's not as good as a pre-approval or a full approval. So your loan type matters here. The appraisal. The reason sellers like cash over financing is there's less moving parts. Anytime you have a loan involved, there's always a greater risk of that falling through. Part of that is the appraisal. So on the appraisal, the contract is or is not contingent on the appraisal. If you're taking out a loan, you will normally have to get an appraisal done. That's for the lender because the house is collateral. They need to know that if you default and go into foreclosure, they can sell the house and recoup the loan balance. So there are some things you can do to guarantee your offer, if you will, for a seller. And one of those is to offer a gap contingency. A gap contingency simply means that you will pay some or all of the difference between the appraisal if it comes in short of the actual purchase price. So it doesn't have to be a full offer. It can be something to the effects of you'll pay $5 or $10 or $15 or $25,000 more than the appraised value, not to exceed the sales price. Sellers like guarantees. If they have someone that's financially strong and they're willing to give them a guarantee if the appraisal comes in short, that obviously gives you an advantage over other buyers who are not. Next up is going to be your closing date, which is also negotiable. Not every seller wants a fast closing date, and certainly not every seller wants a really drawn out extended closing date. But it doesn't hurt to have your agent reach out and ask what the seller's looking for. Some sellers do need more time, so they may not want to close in 21 days. They would rather close in 45 days. So your closing date is negotiable, and it doesn't hurt to ask the seller what kind of closing date they're looking for if you have some flexibility. Next up, in terms of negotiable terms, or something that would make your offer stand out, is if you are willing to buy the property as is. Now, we have two forms of as is in our contract. The first is as is with a due diligence period, which means you still have the right to inspections and you could cancel the contract based on those findings with no penalties. In fact, you might even find some deal breakers that you could still go back to the seller and say, hey, I found these couple of deal breakers and I know I was buying the house as is, but if you're willing to pay for these repairs or reduce the price or whatever you negotiate out, I will still proceed and purchase the house based on you making these repairs. The second, which is much riskier, the house as is with no due diligence period. That is risky. That means you're not getting inspections. But if it's a 1 or 2 year old home, obviously it's less risk than if the home is 30 or 40 years old. So you could offer to buy the house as is, or maybe even with a reduced due diligence period. Our standard contract is the due diligence period is 10 business days. Some states have option fees, due diligence period fees, where it's negotiable the amount of time you get there. That's where you need to consult with your agent if you're in a different market to find out what your local contract allows for. Home warranty. So again, we talked earlier about seller's net, the purchase price, the closing costs. It used to be really common for buyers to ask for home warranties and get the seller to pay for it at closing. It's actually, in an extreme seller's market, it's actually very common for the buyer to not ask for a warranty right now because any seller concessions hurt your ability to win multiple offer situation. So if you don't need a home warranty, it's kind of like a rider on top of your insurance. They cover the things that the insurance doesn't cover, such as leaks, mechanical, electrical, plumbing failures, things of that nature that don't necessarily fall under your homeowner's insurance. Most home warranties are in the $500 to $600 range. So again, sellers are looking at their bottom line, and every concession you ask for, including appliances and personal property, are going to affect their bottom line. So keep that in mind when you're making the offer. Next up is a big one. Number 16 on our current contract is additional contingencies. Sale and closing or closing contingencies. That means that you have a home that you need to sell before you can close. Now, sale and closing, you've pretty much got no chance of winning a multiple offer in that scenario. That means you haven't even listed your home sometimes, or at the very least, you don't have your home under contract. Closing contingency is not usually that big of a deal. That just means you've already got your home under contract, it just hasn't closed, and you need to close your current home before you buy your next one. If you're a first-time home buyer or renter, don't currently own a home, obviously those are non-issues for you, and it strengthens your offer to not have any contingencies like that in there. You know, there are other contingencies you could write in here, tons of stuff. I won't get into those right now. You know, again, appliances conveying or allowances for anything, they're going to hurt your bottom line and make the seller less likely to pick your offer over the other ones if they're similar. You know, one thing we have in here is expiration of offer. Honestly, those are fairly meaningless right now because sellers are going to wait, if they have a lot of showings lined up, for the showings to happen before they respond. So you can't really strong arm a seller into a quick response, at least not effectively anymore. Now, I went through the actual offer itself. Invariably, if I have a lot of offers, there's going to be several that are very, very similar. So when that happens, I'm going to advise my seller client, if I'm representing the seller in this deal, on my experiences with the lender and the agents involved. So if we've got one agent that's known to be poor, has a reputation for their properties not closing, same thing with a lender, then I'm going to advise the seller of such reputation. On the flip side, if I've got an awesome agent, an awesome lender, and they are known for being easy to work with, and they're known for their deals making it to closing, then I'm going to advise the seller that agent and that lender are very reputable. So if everything else fails, and this is 100% your choice as a buyer, you get to pick the lender you have, you get to pick your agent, go interview agents, go interview lenders, make sure you get someone with a good reputation. If you hire a good agent and you trust your agent, they should be able to put you in touch with a well-known, reputable lender, and that's going to help you win deals as well, so that matters. You know, like in my practice contract here I use with my agents, we've got Robbie Realtor, who works for Robbie's Used Car and Home Sales Emporium. When I get that offer from Robbie, I'm like, I don't know about this guy. Robbie Realtor from Robbie's Used Car Sales and Home Sales Emporium. So yeah, hey, it makes a difference. Who's your agent? Who's your lender? I'll make a strong offer, control the things you can control, and then things are going to happen. I will also say it's pretty common for buyers to lose multiple offer scenarios because you're competing with so many people right now. So just be aware that not every home is going to work out for you, and if you do miss one, don't sweat it. It just means that there's another home out there for you. You're going to win that home, and you're going to love your new home, and you're going to look back in hindsight and say, wow, I'm glad those other 10 didn't work out because I love this home so much. So that's pretty much it. Hey, hit the like and subscribe button for me, if you will. I wish you all the best. Happy house hunting, and I hope things go well. If you have comments or questions or need help finding an agent, or if you're in the Midlands, we're happy to help you find a home. I'll have my contact below. We have a huge network of agents, so we can get you, if you're in a different market, we can get you with someone in your local market to help you win these multiple offer scenarios. Again, thanks for watching. Brandon Hoffman. I'm in the Midlands of South Carolina, and like and subscribe. Can you believe my mom told me last weekend she wanted to know where all this gray came from? I don't think it looks bad. What do you guys think? It's not bad, is it? Just shave it, go full mustache. I do like the mustache. Sometimes this gets a little itchy, you know.